Hey traders, TG Watkins here, and let's see, it is January 26th when I'm recording this. And remember, if you guys have any questions about me, come over to profitpilot.com or simplertrading.com, and that's where you can find more information. All right, so we do have a fair amount of things to be talking about. We did have a wild ride the other day from Microsoft, and everything kind of got bought back up. So for now, it's looking like it's going to be strength, like hey, things keep kind of moving up, and things that should have been taking the market down don't. So, the market's up until I guess the next piece of news or information really tries to knock things down. But I gotta say, I'm looking around out there, and we've been in an uptrend now. Of course, it can always be a bear market bounce, but for now, we're going to go with that direction. And the other thing is, once I get into the second half of here today, I'm just going to show you that I think a lot of names have been repriced already, and they are basically at their lows and trying to base and trying to, just put in their bottoms, put in lows, and trying to work their way up. And there actually have been quite a few names that have been moving on up, albeit maybe kind of quietly. So, we're closer to the end of the tightening cycle for the Fed. They've 5.5% is what they've said. Now the question is, do we get all the way to 5.5% before they pause? That's kind of a thing. But they've already done the majority of their interest rate hikes. And the market now knows kind of what to do and how to factor in and price us all in. We know that basically everyone said there's going to be a recession. However, we're getting estimates for our GDP that's actually coming in stronger than we thought and expected. So one way to kind of think about this is 2020 was such a bubble that maybe what we're doing is we're actually just kind of coming back to normality. We're coming back to pre-COVID levels and pre-bubble levels. And, that might look like a recession and really going to tear the economy down, all that kind of stuff. But a recession might actually, in this case, maybe it just means that we're kind of coming back to trend, back to normal. We could undershoot that a little bit, of course. I'm not an economist or anything else like that, but it is interesting to think that maybe it's not going to be as bad as we think. Or, if it is, maybe it's going to be later. Maybe we're just going to be kicking this can down the road. The whole idea is like, well, are we going to actually quell inflation? Or are we just going to kind of quiet down? It's going to be sticky and we're going to deal with it later. Maybe that happens too. And, if that happens, if we're just going to kick the can down the road, well, the market can go bullish and then we might have to tighten again later. But there can be a bull run in between, so that's just remember the 70s if we need to have an example for that. So for the SPY, we continue to make progress. We've talked about this before, the inverted head and shoulders, the trampoline move. Remember, price below the 50, but the Moxie indicator above zero. We've had another trampoline move here. We had another trampoline move there because the Moxie indicator has been above zero. And it just kind of keeps grinding and gets way up. So far, so good. We have been breaking the trend line that is here. In fact, we tested the high side of the trend line. So I'm seeing that the SPY has been testing its trend line. The semis tested its trend line a while back. The Dow just tested its trend line. So we are seeing some pretty good progress out there. And if we look at the VIX, it continues to melt down. So there's been a lot of talk about the VIX and if it's broken and all this other kind of stuff. And I get it, trust me. I'm looking at this and being like, it hasn't really been working very much. But the VIX continues to stay low. So, what are we going to do? Argue that too much? Until this thing can actually show us that it's going to start building, basing, turning up, it's kind of signaling that there's no problem. In fact, when the market pulled back from December, at the end of December or into December into the new year, we really didn't get much going on here. A couple little like blips to the upside, a little blip like that, but then right back down. So the volatility products, and if we look at the UVXY, the volatility products already knew that the market was going to go up. These things knew that going after December, the market was going to move up, because here was December where the market went down a lot and the UVXY barely budged. It went sideways a little bit. It should have done something if this was actually going to be problematic. But the market already knew that this pullback was going to be a pullback into strength as opposed to a pullback into weakness. And you can see, so it didn't do anything. And it continues to melt down. So as long as this continues this trend, then we're looking okay as far as the market goes, and dips should be buyable. And if we look at the NASDAQ, yeah, we are coming up here on the 30 ATR. We are coming up on the daily 200. So yes, it's kind of feeling a little extended. We're not sure when that's going to kick in. But as I said, we might need to be looking at this as dips could be viable. Again, double bottom, trampoline move. We're seeing a fair amount of support coming in here, and these things are working. So, you know, until this tells us otherwise, until this thing starts to roll over and actually fail the other way, and until the internals breadth, you know, starts to really weaken, until we see things start to crumble again, we need to kind of be in the mindset that dips should be viable in this area. And we look at the IWM, you know, it's been going sideways for quite some time. Look, double bottom, higher low, and you know what? Now it has the 50 crossing over the 200. I also know that going back to the SPY, I know that there's been some talk about the SPY looking around back in 2000, and I totally get it. This area right here looks very, very similar to what we're dealing with right now. Yes, price was able to get up to the 30 ATR. It was able to get up over the 200. It broke, you know, there's a trend line here. It was able to break that trend line. So yes, it looked good. Now, the only difference I would say is that the Moxie indicator did not look as good as it does today. So, you know, if the indicator is going to be true, then we'll see how long that can go for. But yes, we do need to keep an eye out that if this move eventually does roll over, we just need to keep that in mind. The other thing to keep in mind is that if the market does roll over, maybe it's not this bad, but we do need to say, okay, if it does roll over a little bit more, what if that, you know, is the last roll down? Because if this comes down, but a lot of names actually kind of hold up and then go up with the market moving down and then up, that means relative strength. And again, I'm looking at the internals, I'm looking at breadth, and there's a lot of stocks that are actually doing better now than they were in August, even though the S&P is lower now than it was in August. And then if we look at the Dow, you know, if we even look at the Dow on the higher time frame, you know, it's you know, we kind of look at the line in the sand. It's been over the monthly 10. It's been over the weekly 50. The 8 is over the 21. Like, all these things look pretty good. Now, it can rest. You know, it had a really, really big move right there. It can definitely rest for a while before then trucking more up to the upside. Okay, so that's possible. And it's kind of looking that way. I mean, until we see something really looking bad, this could really just be a flag. I mean, look at that. It's just a bull flag. So keep that in mind. This could also be a trampoline move. The Moxie indicator still above zero. We saw this level. We saw some positive divergence. So again, until we see something change, this is all looking pretty strong. And then if we look at the semis, we know about that trend line, and it's been breaking the trend line. You know, we've talked about this trend line that's been in through here, and you know what? It tested the high side of the trend line. It also did a trampoline move right there. It did another trampoline move, and you know, this thing's looking pretty darn strong. Now, I know Intel had earnings today and it got hit. Okay, you know, so be it. We'll have to see how everything else is doing. Nvidia is doing great. A lot of the semiconductor stocks are doing great. Not to say that, you know, maybe now is not the best time to buy them, but they are doing pretty well, and I think it's kind of indicative of what's going on out there. Now, Tesla. I've had a few requests for this. Sorry, I forgot it last time, but a couple things I want to show you guys. And Tesla had earnings. Apparently, the market liked it. They did well, and they went up today. And a couple things that I want to show you. So if we look at Tesla, we know that going into the end of the year, it got hit hard. Okay, really hard. But look at this. It was outside of that third ATR, and there is also a giant gap between price and the 8 EMA on the weekly time frame. Okay, so yeah, looks like this thing was imploding, but you know what? It got too oversold. And there's an opportunity there. You know, at least if nothing else, a reversion to the mean. So you just look at that, and number one, you don't really want to go short when it's that far oversold. Like, that's every indication just not to go short, just like it's every indication to not go long, just opposite. And so then if we come over here, the couple of things that we were able to see is, number one, there's the Moxie price trigger. And number two, you could see price was starting to engage with the hourly 50, and look how well that worked out. That thing held the hourly 50 very, very nicely. Now again, might be getting to a point where now is not the best time to buy it because it's coming up, you know, it's at the third ATR and past the daily 50. You know, it's had a pretty good run. So yes, it can go further, but I'm not sure I'd want to be chasing it at this point. I would have to wait for an opportunity, some sort of pullback, something. But that was it. Price down, Moxie indicator up, Moxie indicator fire, and then it held the hourly 50, and that was the trade so far. So Tesla. If we look at Apple, now Apple could still just be a bounce and a downtrend. We don't know how big of a trend this is. I mean, it got pretty wild last time. Look at that thing. That was pretty darn wild. I will say this was a huge move, and I was amazed at how long it actually lasted, because you can see here it just rode the daily 30 ATR the entire time. I mean, this was exceptional. Usually they don't do that. Could it happen this time again? Sure, it could, but we'll have to see. I am noticing that there was some positive divergence right there. And yeah, I just want to point this out because it really carried. And the thing that I was kind of noticing here is it followed the hourly 50 very, very well. And look what the Moxie indicator did. It was very high above zero. Well, let me zoom in so we can see this a little bit better. But look, well, currently the Moxie indicator is very high. It's very high above zero. That means there's a lot of gas in the tank. So this may not be the best place to initiate a long trade, but if this thing dips or pulls back or flags, it could be pretty good. I mean, if these things continue and sustain, then we should be okay. So really, I think that a lot of these things have had really good moves. We're going to have to let some of them settle down and see if that settling down is into strength and bullish or into weakness and wants to crumble again. So that's really going to be the test. Just like I told the Moxie subscribers the morning of Microsoft's down move, I said, this is going to be a test. Okay, if the market's gapping down, if it gaps down and recovers and looks okay, that was a good test. But if it gaps down, continues to go down, things get hammered, get weak, and just can't pick itself up off the floor, that's a failed test. Well, the market passed so far a good test. So Apple going forward, if we can continue to see that dips get bought, or like, multi-day, multi-week pullbacks eventually come into some strength, great. But we just need to keep watching out for that. Now, Microsoft was another one that I wanted to talk to you guys about, since Microsoft was the culprit the other day. A couple things to note. And if we look at this, as I said before, we have price on the monthly 50. We have price doing a double bottom off of the weekly 200. And there's an elf shoe. I mean, that's exactly it. Leg, heel, arch of the foot, ball of the foot. And we'll just have to see, how far is this elf toe going to go? And if this continues to hold, if that double bottom continues to hold, then how much do we really want to argue this? And if we look here on the daily chart, double bottom, positive divergence, and price below the 50, but the Moxie indicator above zero is a trampoline move. That's a very bullish signal. We've seen that in the IWM and the SPY and the semis. Like, we're all seeing a bunch of trampoline moves on the daily charts. And we even saw here on the hourly chart another trampoline move, and then that big dip that we had because of earnings, trampoline move, and the Moxie indicator keeps moving higher. Same thing with the daily chart, keeps moving higher. And you know what? This dip got bought up and it's making newish highs. Not like 52 or anything, but like it keeps making high, it keeps going up. So it's kind of hard to argue the bearish case right now with these things. Of course, we need to be vigilant about it and watch for it and make sure we're not caught off guard. But so far, things are still looking strong, and we got to go with it. Google, same thing. I mean, look what we got. Got a double bottom right here. We've got positive divergence right there. Price down, Moxie indicator up, and it's just been following the moving averages. So far, so good. Now, the thing that we need to keep our eyes out for is if price fails the daily 50. It did it before, sure, but you know what? Double bottom, and we're moving up. So, kind of need to respect that for now. Of course, things can change and they can roll over later, but for now, these things are looking all right. Amazon, kind of a bigger pattern. I'd be looking at this. Number one, there's your positive divergence, but also we could see kind of down here, this was starting to curve up like that. There's your Moxie price trigger. For as much as this went down, the Moxie indicator really didn't go down much. So again, there was some divergence. It looks like price is starting to test the daily 50. We've got a couple trampoline moves here on the hourly chart. You know what? It seems like it's trying. Seems like it's trying. Now, it's not going to be the easiest thing in the world. There are some big moves. There's a lot of volatility. But for the most part, a lot of these things are making progress. So let's take a look at just a couple things out there. Now, these are not necessarily, huge names. They're not going to guide the market. They're not necessarily going to have an effect. They're not groundbreaking. But I want to show you some of the stuff that's been happening out there to show you the lay of the land that says, hey, a lot of things have already been repriced. A lot of things have already had their bear market, and the bubble has been burst. The bubble has been popped in a lot of different areas. And so, you know what? The job of the Fed and what the market listened to said, hey, okay, we get it. Let's take all the froth out of this market. We need to take things down. We need to reprice it. And you know what? The market did that for a lot of things. And the question is, did the market do enough of it? And can we start repairing? And I think that's what everybody's kind of wondering. But if you look at CHWY, I mean, look, CHWY is now back over the monthly 10. CHWY now has the weekly 8 over the 21 and is over the weekly 50. This thing there's your inverse head and shoulders, not the greatest, but it's working. It's working. So something like CHWY, I think, has put in a low, has been basing for a while, and while it may not necessarily be a big winner right now, it might continue to flag and kind of just bump along the bottom. The point is, this thing probably not going to go lower anymore. So if you're looking for longer term stuff or something that could be ready to move up when the market's ready to move up, something like this looks pretty decent. It's already been repriced. It's already put in a low. So CHWY looks pretty decent that way. How about TOST? IPO name that got hammered because the market was going down, sure. But look, it too is over its monthly 10. And look at it. The 8 is over the 21. It's getting past the weekly 50. Heck, even the Moxie indicator is over 0. So, there's some activity here. Does this look like a stock that's likely to go lower? Probably not. I think it seems to have found its equilibrium, its fair value. And I think the market said, you know what? This is at an acceptable rate. And these are the kind of names that should lead the way whenever the market does better, because they are quietly starting to lead the way. Frogger. Now, still, some of these are better than others. Some of them are further along. But look, it stopped going down, and now it's over its monthly 10. You know what? The 8 is over the 21. It's starting to get past the weekly 50 for the second time. And, it looks like it's basing and looks like it's starting to want to move up. How about PACB, Pacific Bioscience? Same thing. Look at this. Over the monthly 10, the weekly 8 over the 21. It's testing the weekly 50, making progress. So keep these things. Look around for these names. These are the good names that have a lot of room to grow to the upside. If you're worried about the market going down anymore, start looking around at these names. These names seem like they are unlikely to move lower in the near future. GENI, this had kind of a bigger up and down movement, in through here. You can see basically double bottom. There's your long-term double bottom, and what do we have? Pretty nice strong bar back over the weekly 50. I mean, look at it. This has been basing for so long that the weekly 50 is starting to level out and probably going to start moving up at some point. And look, it's back over the monthly 10. So there's some good stuff in here. They're starting to work. Now again, you got to look at these individually and figure out if they're right buy points. I'm just trying to show you the bigger time frames and say, hey, this is what's going on out there. CRDO. Let's see if I can spell that. Not the same kind of pattern, but you know what? Look at this. It is pretty much making new highs. This was a really, really good move. So there are some really strong names out there. There are some names that are starting to come alive. So CRDO, GRAB. Again, take them for what they are, and where you see them, and what we look here. What do we got? Double bottom. And you know what? Now it's trying to get back over the weekly 50. The weekly 8 is over the 21, and you know what? It's got price back over the monthly 10. It has been going sideways for so long that the moving average is now caught up with it, and now it's building a base and looking like it could be ripe for some moves to the upside. AHCO. Now, as I said, this doesn't mean it's going to be easy, because I'm looking at monthly, weekly timeframes. Of course, it looks great on these timeframes, but these can be huge moves, and they can also take months to, resolve. So a name can be flat, a name can oscillate and just hibernate for months. So that is the tricky part, is trying to figure out exactly when these names are going to go. Because something like AHCO, this might look great. Look at that thing, up over the monthly 10, flagging. That looks solid. But the problem is this is a monthly chart, and it's been 1, 2, 3, 4, 5, 6, 7 months that it's gone sideways. Okay, so great for investors, long-term, whatever, hedge funds, investment companies, but maybe not that great for us. So yes, we do have to find out when are these things actually going to start taking off and start moving, and that's the name of the game. But I am encouraged that the monthly 10 is now curling up, so maybe something's closer than we think. And we can see price has bounced off of the weekly 50, and we have the weekly 8 over the 21 again, and the Moxie indicator is about to fire. So this could be closer than we think. How about some ETFs? XLC. Now, nothing super sexy yet, but it is at least trying to get over its monthly 10, and it looks like it's put in a double bottom here and had a pretty good move here. Okay, so that ETF looks like it has put in its floor and wanting to start to move up. XLRE. Now this one actually didn't have too bad of a day or of a season. It pulled back, but you know what? It's finding some support here at the monthly 50. How about this? You could say we have an inverse head and shoulders, again, not the most proper one, or we could say leg, heel, arch of the foot, ball of the foot, and you know what? It's starting to move up. So as long as this prior low right here holds, this thing can continue to move up. And again, these are on higher time frame charts, so there can be a lot of movement within them. But bigger time frame charts are not looking too bad. XHB, right there, it bounced off the monthly 50, and you know what? It's over the monthly 10, and it sure looks to me like it held the monthly 10. It tested the monthly 10. What do we got here? Double bottom. And you know what? Price over the weekly 8 over the 21, and price now back over the weekly 50. Does this look bad? I don't think so. It looks pretty good. XAR, another one. It looks like it's already gotten repriced. And you know what? What is it doing? Back over the monthly 10. And here you go too. You have price back over the weekly 50, the 8 over the 21. Now, maybe what you guys are asking is like, well, how do we know the difference between this and this? Hey, there was another example where price got over the weekly 50 and got over the monthly 10, but they failed. Okay, well, maybe let's take a look lower down. Let's see, XAR, and let's look at the daily chart and the hourly chart and see if we can kind of figure something else like that. Well, you can see here, that was that up move when price looked like it got over those moving averages on the monthly, weekly, which it did, but then it failed. So what do we need to know about that? What we need to know is right here. You see how price came into the daily 50 and just sliced right through it and just failed? And you see how the Moxie price trigger fired just after that, and you see how this was just down, down, down. Clearly it didn't work. It did not hold. The moving average did not hold. It found no support, and it continued to move down. Heck, you could see the same thing right here. Price could not hold the daily 50, and you could see the Moxie indicator was red and went back below 0. Couldn't do anything. Now what's different? Look here. This is actually different. We saw price go up, flag sideways, and bounce off of the daily 50, and look where the Moxie indicator is. It's staying above 0. This is different. Okay, so just because you're looking at the monthly and weekly time frame and saying, hey, it's been over this moving average before and it didn't work out. Sure, look at the daily chart, and what are you seeing? I'm seeing something different. I'm seeing something that says this is strength and it's working and the trend is working. So that's happening. And how about RETL? This is another one right in through here. Let me look at the higher time frame real quick. And this is kind of what I was saying, that these things could base for a while. They don't necessarily have to go up right away. But you know what? The descent, the speed at which this has been going down, it's flattened out. It's not going down anymore. And really, this looks like it is trying to put in a floor, a level, and trying to move up. So, there are some winners and there are some laggards. But I look at this and I say, the likelihood that this is going to keep going lower seems pretty slim. So I look at this and say, boy, that thing is really trying to put in a low, it's trying to bottom, and it's actually trying to move back up. So I would, just look around, open your eyes a little bit, take a look around the market, and, keep your mind open to possibilities. All right, everyone, thanks again. See you at the next one.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.